Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another episode of the Coffee Hour. Today, we have a couple things lined up. All right, we're going to be talking about a new ETF that just dropped coming out of Tuttle Management. All right, we'll also be talking about the potential for a Spcx Ipo Prospectus dropping hopefully tomorrow. We'll see. All right, we'll be talking a little bit about the memory trade. All right, we got Micron, SanDisk. They got a bunch of upgrades. So we'll be kind of just reading what the other analysts are saying at these other banks. And, should be a pretty decent stream. I think it's pretty light, to be honest. There really wasn't a whole lot that was going on today, which, is probably a good thing. But we are still seeing the market sell off, and primarily due to, you guys guessed it, right? Rising treasury yields, and of course, the Strait of Hormuz, oil going up, all that good stuff. All right. So always appreciate you guys joining me on the stream. Let me get this taken care of on my side, and then I will get over to the show. All right. As you guys know, I got to sometimes get X moving because X just does not like to broadcast stuff. So let's post this. Boom. Hit that enter button. There we go. Look at us cook over here. How's everyone doing? Hope everyone is doing well. And let's get into it. All right. Boom. All right. So broadcasting on the new channel. All right. Broadcasting on the new channel as well as the old channel. So if you haven't subscribed to the new channel, definitely check it out if you like these types of streams, if you like this type of content that's, more broad-based, macro, individual stocks, that kind of stuff. All right. So let's move on. All right. Here's the heat map. As you guys can tell, it was a sell-off day, right? Everything was hit. Mag 7 completely sold off. Semiconductors sold off, software sold off, just nothing was safe today. Energy, of course, always catching a bid for every single day that the Hormuz is still closed. Again, we're calling that the nacho trade, not a chance Hormuz opens. Okay. Consumer defensive, obviously doing well as well. All right. Coke and Pepsi doing pretty good. All right. Almost up a full percent. Energy, ExxonMobil and Chevron up 1.28%. And then, of course, we have the Amazon, Google down 2.34% and 2% respectively. NVIDIA down 77 basis points. Microsoft down 1.45. All right. So, again, just across the board, semiconductors getting smacked, getting spanked. And then, of course, software also getting spanked. It looks like Datadog had a little bit of a reprieve today at up 3%. All right. So, not too bad there. All right. SanDisk. Got a rating upgrade. That's probably what helped, push the stock up a little higher, up 3.77%. Okay, let's take a look at futures. We are definitely, it was looking worse earlier, but it was looking like we were going to get cooked tomorrow. So we will see. NVIDIA earnings is tomorrow, ladies and gentlemen. All right, NVIDIA earnings is tomorrow. That's going to be a big deal. The whole market is going to be waiting to hear what Jensen Huang has to say on the earnings call, primarily because he is driving the AI trade. If there's any notion of, chip demand going down, or any notion of, supplies being constrained, or they're not going to be able to meet these deadlines or anything, CapEx spend going down, investment going down, anything like that, then the market will definitely have a bad day. But I can't expect that. I don't suspect that will happen. I suspect that NVIDIA will blow out earnings. If anything, it'll probably be extremely boring. And then, we can hopefully just continue on with this, K-shaped bull market. Okay. In the chat, we have Skeptic. Hey, appreciate you joining. If anyone can drop a hello, if you can, if you're free, feel free to drop a hello up in that YouTube chat, or even on the X chat. Don't forget X, you can also chat as well. Okay, moving on to that, S&P 500 down 67 basis points. We have DRAM, the DRAM ETF from Roundhill, which has obviously been all the rage lately. DRAM is actually down 8.78%. So for anyone who is looking to pick up, some cheap DRAM, this might have been the opportunity, right? This dip may have been the opportunity. Just over the last 5 days, it was down almost 13%. Today it had kind of a bounce back up. But again, there's some reason for that. DRAM, for those who don't know, holds the three biggest producers of DRAM and HBM, high bandwidth memory, along with SSD manufacturers. And memory is just so important. Memory storage, HBM memory is extremely important to the whole AI trade. Gold, again, disappointing, not doing anything, right? Just continuing to go down over the last 5 days, down 4.39%. It's just not doing so hot. If we go back to the futures, let's see if we could find not crypto, but if we could find gold in here. Where is gold? There's my gold. All right, so gold down to 4,400, almost 4,500. Still, a lot of analysts are calling for $3,900 gold. The interesting thing is I'm also starting to hear a lot about the possibility of 10,000 gold, which is kind of crazy when you think about it. That would be about, 100% return from here. But 100 or 10,000 K gold. And the reason for that is inflation, right? Inflation, this is going to be an inflation story for the rest of the year. We're not going to get rate cuts, and that's what's kind of driving the thesis for gold. Anyways, let's move on from that. Silver got smacked again today, also down again. This is more of a speculative bet on the metal, or at least a metal space. Think of it as more of a convex, to gold. So if gold is going to go down, silver is going to go down even more. But the story still exists for silver. You still need a lot of silver for solar panels. You still need a lot of silver for electronics. You still need a lot of silver that can't ever be recovered for, electronics that blow up. So silver is still in demand. There's still a lot of capex that never happened to build out these mines. So silver eventually will have its day. Over the last month, again, just down 7.28% year to date, still up 1.75. So we'll see. Maybe it's going to reset and then start to climb higher, down 36% from its former high. I mean, that is pretty damn brutal. All right. Bitcoin also, doing the same exact thing, just going down, not really doing a whole lot. Seems to be just trading flat for now. We will see and monitor, and hopefully we'll catch a bid back up to the upside. All right. So we have, let's see in the chat, we have Gabby's. Hello. Well, hello to you too, Gabby. Thanks for joining. And we have Rod Stamon up in the chat. Always a pleasure to be present on this channel. Appreciate you, Rod Stamon. Always pleasure to have you on this channel. All right, getting back to this. Just a quick win. Shout out to anyone who did hold and continue holding GCT Semiconductor Corp. All right, we talked about this yesterday on yesterday's stream. This stock is up 109%. Okay, 109%. Padre, I don't know if he's in the chat. He's probably lurking, or if he's busy at the moment. But Padre, he usually is, the one calling these out in the Discord. He called this out on the 15th. He bought in, has the receipts, everything. I showed it yesterday, and this stock is up 109%. Shout out to anyone that did stay in. Myself, I could not deal with the volatility. I'm not going to lie. I went in a little too heavy, and I just could not deal with the volatility that was happening. I didn't want to wake up to, a negative 10 or negative 20% decline. Plus, I didn't really have a whole lot of chance to do, due diligence on this company. I do see the bullish case for it, but I just, at that moment, I was like, you know what? I don't need to be in this thing. It's not a long-term holding for me. Again, it was more of a quick swing trade, a scalp, if you will. And the stock today is up 35%. So if you stayed in GCT, congratulations on that 35% gain. I mean, think about it. The S&P 500 barely returns 10 to 15% a year, and you basically doubled your return of the S&P 500 within a day. Absolutely incredible. Okay, another quick win. I am finally up to 1.93 Bitcoin in IBIT shares. Okay, this is coming from the website BitBo. You guys can check them out. It has a lot of great information on Bitcoin. But I added to my IBIT position and then plugged the number of shares that I have in IBIT into this calculator, and it tells me that I have 1.93 worth of Bitcoin. I'm on my goal, well on my way to capturing 2 Bitcoin in IBIT shares, which has been one of my goals for this year. So I'm pretty happy there. I'm going to continue investing. I got maybe another large tranche to put into Bitcoin or IBIT, and that will pretty much close it for the time. I'm waiting for probably a little bit of a pullback on Bitcoin, maybe down to the 70 range before I add to it. I just added to it. I don't know if we're going to revisit, the low 60s. I can't see it happening. But again, Bitcoin's very volatile. Nobody has a crystal ball. Okay, so now that we got the wins in the broader market out of the way, let's talk about a new ETF that is dropping, that just dropped, coming out of Tuttle. All right, coming out of Tuttle Management. And this one's really interesting because there seems to be a few fund managers that are coming out with their, halo trades. We can talk about the halo trade here in just a moment, but halo stands for heavy asset, low obsolescence. So you guys can see that right here at the top. And I'm going to go over it really briefly. We're going to watch a video from another fund manager that had what I believe was the first, halo ETF. But you have Roundhill. We talked about Roundhill the other day. Roundhill came out with the LEHO ETF, right? Low obsolescence, heavy asset. So it was the LEHO Halo ETF from Roundhill. They came out with one. Now you have Tuttle Management coming out with one, or Tuttle Capital. But the OG, as far as I know, is Gara. Okay, Gara, we talked about this fund a while ago. It was this. Shout out to Skeptic for always bringing these up, man. He finds probably the best ETFs out there, like the most obscure ETFs in the strangest corners of the internet. He just finds these fund managers and these ETFs. But the real assets income, right? Or the halo trade. It is known as a halo trade, right? Essentially, what these ETFs are investing in is companies that can't really be, destroyed, obstructed, whatever you want to call it, by AI, right? They have a defense against artificial intelligence because these are real companies, real assets, and things like that. So what we're going to do real quick is, we're going to listen to from Gara their perspective for 2026. Okay, just on the halo trade. I think it's actually a really interesting video people should check out. And then I'll introduce you to a white paper, and we'll again kind of talk about the Halx ETF from Tuttle. Okay, so let's listen in real quick.
So 2025 was very much a story of two halves for infrastructure and real estate companies. Over the first half of 2025, we saw very strong defensive performance, particularly coming from utilities, against the backdrop of the tariff-driven sell-off that we saw in March, April time. Moving into the second half, performance was a little bit more muted as we saw some of the macro concerns surface, and also some of the debate around whether or not we were in an AI bubble begin to move markets with a bit more volatility. 2025 was also an important year for rates. We saw the continuation of the easing cycle, policy rates coming down by 100 basis points in the US, by 75 basis points in the UK. But I think what was particularly interesting was that we didn't really see longer dated maturities move very much in terms of yields. If you look at the US 30-year, kind of ended where it began in terms of 2025. It was really only at the shorter end that we saw some of that impact of policy rates translate into lower yields. So looking into 2026, I think there are three things worth highlighting within the real assets world. Picking up again on rates, if we see a continuation of the easing cycle in 2026, as markets are broadly anticipating, then that will represent a continued tailwind for infrastructure and real estate companies, which are typically sensitive to interest rates. Secondly, within infrastructure, we think European utilities is one area to particularly focus on. The sector has broadly been in the shadow of its kind of US cousins up until this point, but we think there's a bit of an inflection point coming within European utilities as electrification and a general growth in energy demand is likely to create a lot of opportunities both across transmission, distribution, and generation. And the sector, relative to the broader European equity market, is currently trading at a slightly wider discount than we've seen historically, which we think presents a really interesting opening valuation point in 2026. And finally, for real estate, we think that sector dispersion will continue to be a major theme during 2026, where the majority of attractive returns will probably be concentrated on a narrower subset of available real estate subsectors. If we think about 2025 for areas like data centers and cell towers, it was a pretty tough year. But actually coming into 2026, I think those are some of the sectors most positioned for growth and potential re-rating in terms of valuation. Also within healthcare, we look at the senior housing opportunity, we look at primary healthcare. These are areas that we again think are relative to the wider real estate market, positioned well and potentially able to outperform the broader
Oh my God, I cannot believe I was muted the entire time. This is so freaking embarrassing. All right, let me try this all over again. Holy hell. God. Okay. I can't believe I just went through a whole rant and I was completely muted. Okay. All right. Anyways, talking about the Gara trade, right? Going back to the State Street sector rotation. Okay. If you guys look at the 1 year, you guys see there's information technology. All right. Information tech has been pretty much the talk of the town. You have AI CapEx, you have all of that stuff, right? What Gara or excuse me, not what Gara, what the Halo trade is targeting, right? What the Halo trade is targeting, it's targeting obviously the hard assets, long duration, low obsolescence. The thesis that's not just artificial intelligence, not just semiconductors, not just software, all right, not just chips. It's targeting everything outside of that, the power plants, the grids, the data centers, all right, and more than just that, it's also targeting airports, water, producers, utilities, energy, all of that stuff. There's even real estate investment trusts in this, like, when we think about healthcare or we think about data centers, there's data center REITs. All right. So you're also going to have utilities like Duke Energy or Nextera, right? Also a part of this trade. This is everything that cannot be just, disrupted by artificial intelligence. These are real companies, real people, real employees that need to go out and do this stuff. So that is what makes the Halo trade really, really interesting. Now, one thing to note, one big thing to note, this is not going to be an outperforming ETF or an outperforming stock. Okay. This is not going to beat tech. It's not going to beat technology. It's not going to beat, the semi trade or the memory trade. What this is it's a defensive, a defensive position in your portfolio against AI. Okay. The only thing that could really derail something like Halx or something like Gara or something like Leho from, Roundhill, the Halo ETF as well, is interest rates. And as you guys know, energy shocks are starting to be felt. Interest rates are kind of up in the air right now. Are we going to go lower? Are we going to actually get a rate hike? I mean, there's a lot of crazy things that are happening right now. That type of stuff, more expensive commodities, oil. We know AutoZone just published a letter not too long ago, basically saying that motor oil is kaput, right? They're running out, right? AutoZone, saying that they're going to start having to basically ration the stuff. ExxonMobil, Chevron can't produce it fast enough, right? They don't have access to the commodities to produce it, right? Because of the whole freaking Hormuz thing. All right. So all of that can affect these stocks as well. All right. So you got to keep that in mind. If you're thinking about a ETF like Halx or an ETF like Leho or an ETF like Gara. Okay. These are all a part of the Halo trade. So this white paper is actually down below in the description if you guys want to go through it. But the website from Tuttle Capital actually does a really good job going over all of this stuff. Okay. So goes over all of this stuff. You guys can check them out. Again, don't go all in on this ETF. All right. This is a defensive play against kind of the AI trade when you really think about it. Okay. Excuse me. So that is what's interesting. Let me just double check the chat. Oh my God. Yep. Hey, we got retire on dividends. Hey, what is this? Amateur hour? I know, man. This is so embarrassing. This is a meme at this point, man. It's just Eugen muting himself. And it's funny. We were watching the video. I'm like, okay, I'm reminding myself to unmute myself as soon as the video finishes. And as soon as it was finished, I went straight to my notes and just started reading off. Man, this is amateur. This is my first time streaming, actually. Yeah, this is my first time streaming, guys. All right, ladies and gentlemen. So, give me some grace here. He must not have had his coffee. Thank you, Pay the Piper. I actually got it right here. I got the big cup today. Pretty much a full pot in here. Okay. Let's see. Start from the Gara video. Yeah, I got it. Let's see what else we got. Appreciate all you guys joining. All right. Appreciate the 62 members on X. Appreciate the 24 members on YouTube. All right. Appreciate you guys joining me for this stream. All right. Bleppo says, I thought it was my phone. Sir, it was not your phone. It was all me. All right. It's amateur hour over here. Okay. Yep. Classic huge. All right. That's what Rostamon says, of course. All right, now we got 2 minutes of bashing Eugen on how garbage of a streamer he is. All right, good evening, Eugen. Love the live streams. Appreciate that, Maverick. Thank you so much. I appreciate doing these live streams. Okay, cool. What else we got? Side note, so far, Gara is the only one to pay a dividend, 3.5% quarterly. Well, there we go. That's actually not too bad. Not too bad. I know it's not the 100% yielders some of you guys are mouthwatering for, or even the 10.5% or the 14 percenters. But hey, I mean, 3.5%, not too bad there. Okay, now that we went through Halx, we talked about the Halo trade, why it's important. It's kind of a defensive play against AI. Again, you're not gonna outperform. Again, looking at the sector rotation from State Street, this is a big deal. Again, information tech 50%, but if you look at energy, industrials, mats, utilities, healthcare, and even some real estate, I mean, all of these together, make up the rest of not only the sector rotation, but you guys can see where a lot of money was flowing to, and it was into energy, was into industrials, it was into materials, right? So you guys can see that for yourself over the last 1 year. And then of course, over the last month, or let's do 6 months, right? Since the start of this year. All right, well, we could probably just do year to date. There we go. Boom. Energy, absolutely destroying information technology, right? Materials, industrials, consumer staples, real estate, right? So a lot of emphasis is being put on energy, right? The energy sector. We have Sergio. I thought I was early. I am here. You are here. And welcome, Sergio. We will be going over that link you did send me. I appreciate that. I haven't had a chance to actually play around with it, but I think it is interesting that we could at least look at a visualization of data centers. All right, so cool. Then we have from Skeptic, Halos are basically the new moats. Yeah, I know moat is an ETF as well. I have not really went over a moat. Maybe one day. Okay. Now that we got all of that through, we talked about the Halo trade. We talked about the new ETF. We bashed on Eugen a little bit for being an amateur. Let's go to another ETF that will be dropping in the future coming out of Tuttle Management. All right. That is the Tuttle Capital Magnificent 10 ETF. The beauty of this ETF is that it's going to include Broadcom, AMD, and Palantir, the original Mag 10, right? The new Mag 10 is going to be Anthropic, SpaceX, OpenAI, and then they'll probably have AVGO in there and kick out Tesla. I don't know. I'm just kidding here. But there is actually another ETF. It's called the Mag 10 Plus coming out of Roundhill in the future, and it is actually going to hold those three IPOs or those three companies once they eventually IPO, unless they get SPV shares or something. But outside of that, I think again, this is a good time to be an investor. We have ETFs dropping almost every single other day with very thematic plays, with very specific companies playing on either a memory trade like DRAM or a whole sector, or a theme like the Halo trade, the Gara. You got the Leho, the Halx, and then now we have the Mag 10, right? Where you can get, specific exposure to not only the Mag 7, but the companies that are also powering some of these Mag 7s, AMD and AVGO, right? I mean, these companies are just as important, and they're going to be a part of the $1 trillion club at some point. At least I think so. Palantir for sure is going to be $1 trillion probably in the next couple of years. It's obviously getting a lot of hate right now because, I mean, you guys could just see the software sector absolutely unloved. But hell, I love Palantir. I love what they stand for. I'm bullish on the stock, and I'm going to just keep riding that. Okay. Anyways, let's get on and through this. All right. So we're going to hop into a little bit of, it's like a 2-minute clip of Trump talking about the Strait of Hormuz and Iran. All right. So we'll just listen to that. Again, I don't care what your politics are. This is Politics Free Channel. Love him or hate him, he is the president, and he's driving pretty much this whole damn thing at the current time. But let's see what he had to say.
We're blowing it away. We're blowing everything away, and we're going to end that war very quickly. They want to make a deal so badly. They're tired of this. This should have happened for 47 years. Somebody should have done something about it, and it's going to happen, and it's going to happen fast, and you're going to see oil prices plummet. They're going to come down. There's so much oil out there. They're going to come plummeting down.
Sorry on the audio, but that was the best clip I could find. And that's coming from Fox News. So anyways, outside of that. So Trump is saying that, Iran wants to make a deal. He's been saying this for weeks. Iran has, been sending in their demands for negotiations, etc., or what they want to take away from it. They're trying to get control of the Strait of Hormuz. United States and the rest of the world really don't want that. Then they try to implement a toll system, and then they came out with their insurance policy, which is backed by paid for and by Bitcoin, which is hilarious. So Iran's not going to capitulate anytime soon. The Strait of Hormuz is going to continue to be closed and blockaded, at least for the foreseeable future. There was potential strikes that were supposed to happen on Tuesday today, but Trump had rescinded those attacks and those plans, saying that, hey, the UAE, the Qataris and the Saudis all said, hey, back off for now. Let's try to work through some negotiations. But those three countries, their government spokespeople came out and said, we did not say anything. So we probably have a taco event. But on the flip side of that, at least for some geopolitics, there was an article published that basically said that Iran during the entire ceasefire had ramped up their air defense, and the United States could not afford another plane going down and another rescue mission. So negotiations are still ongoing, and the Strait of Hormuz is still closed, and oil is still rising. Okay, so we got that to contend with, and now we also have the 30-year Treasury starting to top. Okay, 30-year Treasury, 20-year, and the 10-year. 10-year influences, really mortgages. The influences, debt for companies, and that has risen to 4.6%. Okay, that is very worrying. A lot of these treasuries going up is very worrying, and that is why we're seeing the market continuing to sell off, right? Especially the technology companies, the tech sector, because the tech sector relies a lot on debt, to fund its operations, fund its growth, its expansion. And when debt is expensive, small businesses in general, people can't buy homes, they can't grow their companies. So it's going to get spicy. It's definitely going to get spicy, but that's not just the only story here. I've talked about this probably ad nauseum on other previous streams. The other big problem that we're going to have here is the interest rates. Okay, the interest rates, I keep bringing this up, but I want to bring it up in case people are new to the channel. They have not seen this. This is coming from the CME group. This is the Fed Watch tool. This is the probabilities. You guys might be more familiar with this chart, right? We're definitely not getting a rate cut. Okay, that's what it says. We're going to stay at 3.5, 3.75 of our interest rate. But if we look at the probabilities of rate hikes, 375 to 400, is rising in the first half of 2027. Meanwhile, the market is pricing in no rate cuts for the rest of this year. Okay, so now you have the Fed who's stuck in a rock and a hard place. They can't raise rates because that would not only upset the president that just put you in there, at least for Kevin Warsh, but you can't lower rates because then you're going to cause massive inflation. But if oil stays up where it's at and the energy shocks are continuing to be felt for months at a time, well, the government's not going to allow a recession. The government's just going to print money anyways, right? The Fed's just going to continue printing anyway. So really, all roads at this point, in my opinion, lead to money printing. So this is why, and I'm going back to gold, this is why there's a lot of talks out there about gold 10,000. Right now it's $4,400, right? But there is a case out there that if inflation and money printing continue to happen and the gradual print by the Federal Reserve, then gold is absolutely going to run over the next year or so, right? Definitely over the next 5 years, it's going to be higher than where it is today. How much more? Nobody really has a crystal ball, but the case is still there. The bull case is still there for gold. So, just going back to the Fed Watch tool, rate hikes are a possibility. We will know more next month when the FOMC meets and Kevin Warsh, I believe, has his first press conference, and we'll be able to actually know a little bit more because the Fed meeting minutes are going to be published here soon. If they haven't, I haven't seen them being published yet. But once the Fed meeting minutes are published, which was Jerome Powell's last meeting, then we'll have at least a little more clarity on what the Fed is thinking and how they're looking at all of this, right? Because they keep saying, oh, we'll wait for the data. But, Kevin Warsh, one of the, I guess, positive signs about Kevin Warsh is that he wants to implement new ways on looking at the data, not just looking at the BLS data, which is a month behind, and the way they're doing it is very archaic. He's looking at, kind of modernizing the Fed and the way they look at data. So, some exciting things, at least from, the Federal Reserve is coming. So that's that, right? If interest rates rise, we're all screwed. I mean, not to be a doomer. If interest rates, lower, I mean, we're screwed that way too, in one way or the other. Investors, people who own assets will be the beneficiaries. Stock, S&P 500, doesn't matter, right? My bullish case, my base case is gold and Bitcoin. I keep talking about gold and Bitcoin, all right? Last year, Michael Sonnenfeld, Tiger 21, all right, you had Paul Tudor Jones, you had Kathy Woods, all saying that this year was going to be an inflation year, and they're absolutely 100% right. In my opinion, of course. You also have Paul Tudor Jones that recently came out. He was on a podcast and he just said, yeah, I'm buying AI stocks. And he increased his shares in the Mag 7 or some of the Mag 7 companies. So AI is here to stay. AI is growing, as we all know. But this right here is going to harm, could throw a wrench in all of the works. So keep an eye on the language of what we hear for interest rates. Okay. So let me just check the chat real quick. So Skeptic is saying cough, riser, cough. Yes. So riser is an ETF that actually takes advantage of the rise in interest rates. So we were actually talking about this, me and Skeptic was. We were talking about it after we filmed our video for EUV. And you can look at riser as an inverse to the 10-year treasury. If you were to line up the 10-year treasury with riser, you would see that they almost trade opposite of each other. So as the 10-year continues to rise, riser will fall, I think. No, something like that. If 10 years drop, I don't know. I forgot, Skeptic. I forgot what, because we kept saying like is the inverse of this and that. But anyways, yes, this is the Folio Beyond Alternative Income and Interest Rate Hedge ETF. Okay, so you're hedging against rising interest rates. All right, so just something to look at and consider. Again, this is a very defensive position. This is not gonna 100x your money. But if you're scared or worried about what's the possibility of interest rate hikes, then this could be a position in your portfolio. Again, I would not go heavy in something like this, because you could probably look at this as maybe kind of like an S-Gov with, some upside potential, something like that, where you want your capital to be protected. That is what it would be. That's kind of how you would look at riser. Skeptic says, just got to remember, rates go up, their NAV goes up. Also monthly dividend. There we go. Excuse me. Oh my God. So yeah, rates go up, NAV goes up. There we go. That's all we need. And Liquid also came out. We should do a thing about Liquid at some point. But yes, Curve also came out with Liquid ETF LQID. Again, it's to help provide some cushion, a little more liquidity, and you can collect a little bit of income. It's like a juiced up S-Gov essentially, right? Which is 0 to 3 month short-term treasuries. Okay, so let's see what we got from Randy. Good evening, Eugen. What do you think of SATA and them starting in June, paying dividends every trading day? Well, we talked about this on, I think, the Sunday Invest and Chill session, and I like it. It was not too long ago that Defiance came out and they were saying, oh, we're going to pay you twice a month, right? And twice a week, and everyone went crazy, right? And then a year and change ago, that's when the weekly pay series came out from Roundhill, and they were paying out every single week. That was innovative as hell. Everybody loved that, right? XDTE, then you had the weekly pay series, the 1.2x leverage, and then you had Yield Max follow suit. Eventually, starting off for everything pays weekly. So it's crazy that we got to this point, because not too long ago, and this is what I mean when I say we're very privileged to be in this time, as investors, because all you have ETFs coming out of the freaking far left fields. You have auto callable ETFs now. You have everything that was only allowed to high net worth individuals or institutional trading desks now available to retail, right? Investors in the form of an ETF wrapper. Doesn't mean they're all good. Private credit sounds fancy until you realize that you're getting screwed and you can't get your money out. But anyways, outside of that, I think the SATA thing is awesome for not only the company Strive. I like Strive. I like True North. True North is the channel you guys can check out. They used to be known as MSTR True North. But Strive is a treasury company just like MSTR, much smaller in size, but they're doing a lot of innovative things, in the space. Bitcoin powered credit, right? Which is SATA, right? You have Stretch from MSTR. I like the fact that they're paying, every single day. Doesn't mean I'm going to jump into it, but it's nice to see that, there's optionality out there, right? There's a lot of optionality out there. We did a quick ChatGPT thing, a hypothetical $100,000 in SATA, compounded, 13% annualized. We don't know if that dividend will always be that. That's what you have to keep in mind. That dividend distribution may change. It's up to the board. Same thing with Stretch, right? The board can raise it or lower it whenever they feel. I can't see these companies stopping the dividend altogether, because then that would just collapse the ETF probably. But outside of that, I think we're living in a very good time. We're very, very privileged to even have access to something that could pay you every single day. And if you were to compound, SATA 13% annualized, 1, 3, and 5 years, that compounding just looks crazy. You would basically have a full return of your money in 5 years, right? I think that's just cool as hell. But we don't know if that dividend rate will stay the same. And you have to understand what SATA is. The same thing with Stretch. Okay. They're basically, these are credit-like instruments. All right. So they're going to the open market and saying, hey, we will pay you, 13% or 11.5% for your money. And then they use that money to go buy Bitcoin, right? Bitcoin's CAGR at the moment is about 30%. So, these treasury companies are making money off that spread, right? So you have to understand what Bitcoin is, the CAGR for it. Are you a believer in Bitcoin? Can it go to zero, right? Those types of questions that investors, especially, retirees should think about. Don't just YOLO your money into SATA expecting to get paid every single day for the rest of your life. I think we've all made a lot of those mistakes. But anyways, outside of that, that is what my thoughts are about SATA. And, congratulations to the Strive and to the Strive team and to the True North team. They're absolutely smashing it. As a matter of fact, Jeff Walton, punter Jeff, he's on the team for Strive and on the team for SATA. And he did an excellent job debating CoffeeZilla about the positives for Bitcoin powered credit, backed credit. So again, people should listen to that whole thing from punter Jeff, CoffeeZilla, because CoffeeZilla came at this saying basically these are scam products, these are Ponzi schemes, and the math is the math, as Jeff said, and Jeff has proven that these are not Ponzi schemes and these are not scam ETFs or scam preferred shares. All right, so anyways, enough about that. Enough about Bitcoin. I can go on and on about that stuff, but thank you for your question, Randy. All right, so we're going to move on to SpaceX. Okay, so SpaceX is getting one step closer to IPO. Okay, SpaceX picked Goldman Sachs for lead position, but they also went with a couple other ones. They went with JP Morgan, Bank of America, Citigroup, and JP Morgan Chase, right? And Goldman Sachs. I'm just going to say it. This is kind of why I'm a little worried that retail's not going to get jack squat from this IPO, just like we saw with Cerberus, where only the wealthy people got, those shares. Retail's probably going to get screwed out of this SpaceX. I'm just being honest here. I really think we're probably going to get screwed out of it. We'll see. Once they actually divvy up the shares for IPO, we'll see if Robinhood gets a sliver, or Webull, or the other brokerages outside of these guys. Because again, these are all wealth management firms. Morgan Stanley, Goldman Sachs, Citigroup, JP Morgan Chase, Bank of America, they all manage a lot of people. They have a huge client base. All right. So they're definitely pitching their, shares, their allotments to their client base saying, hey, SpaceX IPO, you want to get in on this or what? And people are going to eat that up like crazy. So we shall see, but this is one step closer to the prospectus dropping. I think is going to be a lot of FinX, a lot of Financial X going over every single detail of that prospectus. This is, again, just one step closer. And Elon Musk is probably going to go on his, world tour talking up SpaceX interviews, all that such, because they're expecting the IPO sometime next month. So, it's getting close. It's getting very, very close. So this will be very interesting. I'm hoping RVI, Robinhood Ventures Fund, gets in on this IPO, at least, able to pick up some shares or something. Okay. Yeah. Skeptic says Goldman Sachs. Oh, we're not getting. Yep, that's true. And Fugazi ETFs, referencing the the stretch and the Bitcoin backed perpetuals. And Skeptic also says, who's also very bullish RVI, Robinhood Ventures Fund 1. Getting, side note, RVI is getting it too. Keep tabs if you're still holding it. I'm still holding my RVI shares. Definitely like what it's been doing. Hopefully we can get back up. That pump to 200% was absolutely insane. Absolutely insane. Should have sold at the top, but whatever. I'm going to hold it. I definitely think it'll climb back up. We have some from Sergio. All right. Ulti should pick up some SpaceX. Oops. Hopefully it comes back up. There we go. Ulti should pick up SpaceX, Cerberus Systems, and other hot IPOs, plus MSTR. Ulti held MSTR at one point. I believe Ulti did hold MSTR at one point. I think people... anyways, I'm not going to go into that tangent. Anyways, let's move on. All right. So we got some news coming from memory land. All right. DRAM. We can kind of surmise why we had a little bit of a pump today. Even though it's just up almost a percentage point, we could still at least get some ideas of why. Micron. All right. Micron, SK Hynix, Samsung Technologies. These are the three biggest names in the DRAM space. Okay. In the memory trade. They are the only producers, really, of DRAM and HBM, high bandwidth memory, that the semiconductor companies need. Okay, so let's read real quick some price upgrades from some other analysts. Okay, so Mizu is giving an upgrade to Micron, ST Micro, and Texas Instruments. Texas Instruments has been making a lot of waves recently. A lot of people have been getting interest in Texas Instruments, which is kind of crazy because they're also in the EUV ETF, if I'm not mistaken. But Texas Instruments, they make your damn calculators, your calculators for college. Nobody would have thought that they'd be important in this trade, but they are. They absolutely are. I still have not done enough due diligence on Texas Instruments to understand why, but they're all getting price hikes. Okay, so Micron Technologies, STM, and Texas Instruments received price target hikes at Mizu Securities. Due to tailwinds from artificial intelligence. Okay, we take a look at the impacts of AI data centers on the analog and memory markets. Analyst Vijay Rakesh wrote in a side note to clients. Memory continuing to see tailwinds across NAND, which is a storage. Seagate, Western Digital, SanDisk. You can think of them from AI server demand, with supply potentially tight into the first half of 2027. And a potential Samsung strike looming. Okay, so that Samsung strike, which we covered yesterday, is still on the table. Still don't know what's coming of it. If Samsung has a strike, labor market, or the laborers don't help produce any of the chips, that's going to create, a lot of ripples. I don't know if the stock is going to go up or down. It might go up because now memory is even more, more scarce, or it might, just cause a big sell-off, right? We don't know. But, that is on the table. So Mizu giving price hikes, price targets for these new companies is a big deal. We also have SanDisk and Focus at Citigroup. All right, Citi ups its price target more than 50% amid strong pricing demand. SanDisk is in DRAM, all right, is in the DRAM ETF. Now, this stock has been up like, a couple thousand%. So, why not just hike its price even more? So SanDisk was in focus on Tuesday after Citi upped its price target more than 50% among strong pricing and demand for storage fueled by artificial intelligence, rising SanDisk to 2,000 from 1,300. All right, following strong Kioxia earnings, reinforcing our view of persistently strong storage demand and highly favorable pricing environment fueled by intensifying AI interest. All right. So Merchant said that the long-term agreements signed by the company provide gross margins of 80% or more and offer predetermined volumes, which will grow throughout the duration of the contracts. So remember yesterday we talked about Seagate and how they don't want to build new factories because it'll take too long. And then that they could just focus on, quarter by quarter, and keeping those, those forecasts strong. That's essentially what these companies are doing as well, right? So we see that exactly with SanDisk. All right, the predetermined volumes. All right, Citi expects the average selling price of NAND storage to rise 186% in 2026 with eSSDs. Okay, what happened here? Who broke it? Okay, who broke it? Right in the middle of the stream. Right in the middle of the stream. Come on. Anyways, memory is climbing as well. The costs of these storage devices are climbing, which is also why SanDisk is getting a bump up on price. Okay, so moving on, Micron. Oh, wow, they really just erased everything. Man, what is going on with my computer these days? God, I'm going to have to throw this thing in the garbage at this point. And I really believe it's this highlighter. All right, this highlighter app that I use, I think this thing is just broken. And it just keeps breaking things. So I'm gonna have to uninstall this highlighter. Anyways, Micron sees bullish views at Citi as well on expected DRAM price hike. So because of it's costing more to make these specialty memories, DRAM, HBM, etc. They see price hikes in the not too distant future. So when price hikes come, companies like NVIDIA, companies like AMD, companies like probably Intel or anyone else that uses this type of RAM, they're going to have to pay for it, right? They're going to have to pay for it. And that is why, Citi is also expecting these DRAM price hikes because Micron already came out and said that their forecast for pretty much the whole year, everything that they bought is pretty much already bought and paid for. They're not producing stuff fast enough. All right, we can close this. Okay, so moving on from that, apologize for the technical difficulties, guys. I, again, don't know what's going on with this highlighter app. Real quick, let's check some of the chats. I know Sergio's probably laughing his butt off at the at the technical difficulties. Let's see. So why would RVI get it if it's pre-IPO? I think, RVI would probably try to get, SPV shares. I know it's a little late, but I still think that they would try to get it. I mean, they got OpenAI, and OpenAI is not that far from going public either. I'm hoping RVI gets Anthropic, at least gets Anthropic. Anthropic currently is raising $30 billion in its funding round, so I would hope that RVI would get a sliver of that. That's only going to be good. You can get the private, the other one that came out, VCX. You can get that one and have your exposure to, Anduril, Anthropic, OpenAI, and SpaceX already. But I like RVI. I like Robinhood, so I'm going to opt to go for Robinhood. But I like Fundrise as well. Fundrise is also not a bad platform. Okay, let's see. So meaning RVI is not pre-IPO. Not sure why would they get it after it hits the market. Yeah, I mean, that is a good point too. Let's see. Skeptic says, thought Texas Instruments only made calculator. These boys are all in on RAM. Absolutely insane. Yeah, who would have guessed it, right? Who would have thunk it for Texas Instruments? Okay, so this website was given to me by Cookiemon, aka Sergio, up in the chat. So thank you, right? So this is a U.S. data center map. I put this in the show notes in case you want to go around and fiddle around with it. But this is the U.S. data center map. You can find where the data centers are and where they're being built or proposed. I thought this was actually kind of really cool. All right, so we know that the number one facility or the number one state right now is Virginia. Then you have Texas coming right behind it, Arizona, California, and other states after that, right? But here's the map. Here's the actual map of all of the planned data centers, and you guys can see there's a lot of data centers being planned for across the United States, right? You have only a handful that are under construction, right? These yellow dots. There's only a handful of these. And then you have, existing data centers. And again, there is a lot, but there's compared to what is being planned for, what's planned for is way more, just substantially more. So the data center trade, again, the CapEx spend, $700 billion being spent by hyperscalers. We always talk about, who are the third, fourth, fifth derivative plays. You have HVAC, you have power, you have fiber optic cables or fiber optic makers, even a layer below that as a substrate or glass substrate manufacturers. You also have, the semiconductors, chips, AMD, NVIDIA, Cisco as switches. You're going to have, let's see, Dell is probably up in the mix. HP is probably up in the mix. And then you're going to have, of course, Intel. There was a paper, not a paper, but there was, a shortage on CPUs. So AMD, Intel, definitely the beneficiaries of this. And you guys can already tell that from previous, that everything was always about the GPU. But now as we move from, just general AI into agentic AI, into inference, artificial intelligence, it needs a lot of CPU, a lot of CPUs, right? Right now, the ratio of data centers is 1 to 8. They're trying to get it down to 4 to 8 and eventually 1 to 1. So there's going to be a lot of CPU demand. And then, of course, you have Ramageddon, not enough RAM, not enough DRAM, not enough memory. Okay, so these data centers are being planned. They will eventually be built out. And that trade, I mean, again, it takes a couple of years to build a data center. All right, so it's not just going to happen overnight. So this trade, in my opinion, is alive and well for at least the next decade. Okay, so that was a lot of streaming. And that was a lot of silence when I muted myself. So I appreciate you guys. And I apologize again for the technical difficulties I am having on this computer and on Google Chrome. I really think it's this damn highlighter. But I will put a link down below in the chat for YouTube. And I'll put a link in the, what is it? In X. I gotta open this live screen. Hold on. For YouTube, in case anybody wants to come on and we could talk about anything we talked about during the stream, or if you want to just share what you're investing in or share ideas, whatever, you guys can come on to the stream and we'll talk. All right. You can share it with the community, share it with the audience, and shout out to the 83 viewers on X. Shout out to the 29 viewers on YouTube. All right. And again, for anyone who is watching, this will be my future channel where the live streams will migrate to. At some point in the future, I will stop streaming on my old channel, which is pretty much my same name, but it's more geared towards like high yield investing. All right, this channel is going to be more so for investing in, broader themes, other ETFs like, the GARA, the Halx, these other ETFs that are important. Even Riser, right? We can even talk about Riser. But yes, that's what this channel is going to be all about, right? It's going to be stocks. It's going to be trade ideas, themes. It's going to be all that stuff. Whereas the original channel is going to be more so for the high yield stuff. I understand a lot of people still love the high yield space and all the cool ETFs that are coming out from Curve, Roundhill, Neos. You got X funds on there, and now you have X ETFs. I mean, there's just hundreds of new ETFs dropping every other day for the high yield space. So it's an interesting time. Randy says, thank you. And you're very welcome, Randy. Let's see. And then Skeptic says, I like the idea of putting them in the ocean or underground. He's talking about the data centers. I know there was that article that Skeptic had posted about data centers back in the ocean. Microsoft had tried this and they basically went against it and said, no, said, nah, not going to work. But it seems like people are still going to try it. So, data centers in the ocean, data centers in space, and data centers on land. Let's see. So there was a drop. Okay. So there was a drop. Let me see. Hold on. I see your message, Skeptic. Let me see how I can get this out here. So for anyone who's interested in doing a little bit of work, but this one was dropped in the community, all right, in the Discord. Again, link to the Discord is down in the description if you guys want to join. Again, there's no paywall. You don't have to pay to join. But we discuss everything. We discuss high yield ETFs. We discuss single stocks. We discuss these these small cap stocks, which have big potential, like we just showed with GCTS, which just today had a 35% gain, right? And over the last 5 days, up 100 and something percent, right? And again, none of this is behind a paywall. We're just a bunch of investors just sharing a bunch of crap, all right? We're just enthusiastic about finance and about investing. So check us out if you want. But going back to this link, all right, so this is a new stock. I'm not endorsing it. I don't know anything about it. All right. This just came out. It hit the Discord not too long ago. So I got to do a little bit of DD here. But this is Saddle or Satellite or Satellogic. Yeah. Satellogic. Let's see what it does. It does asset monitoring, space systems, and constellation as a service. That's new. So again, talking about the whole space race and everybody trying to, run to space. You have the Spacey ETF from Tuttle as well, Tuttle Capital. Again, I'm not sponsored by any of these guys. I'm just going over the ETFs, but Spacey is one of the premier, space income ETFs. And then you have Mars from Roundhill. Mars is also another space ETF that I think does not get enough love or even, mention. But yeah, if space is the next frontier, I mean, imagine what goes into these space satellites. Imagine all the electronics, all the cabling and all that stuff, right? The chips. Not NVIDIA probably not going to be in there, right? I don't know if NVIDIA is going to be in these satellites, but there's going to be all these other specialty chips. GCTC or GCTS, which we just covered, they make 5G SoC chips, right? System on chips that are specific for satellites. So again, just very light due diligence, surface level stuff that I'm talking about. But you guys can take this ticker and at least run with it. At least here's the idea. It's currently has customers in defense, intelligence, government. They have a couple of commercial clients. Let's see some of their financial highlights. So 80% revenue increase, positive cash flow. That's good. They have a net loss of 13%, which I suppose is not too bad. And it looks like they're increasing sovereign defense contracts. If you guys are believing in the government super cycle, and I know, everything is a super cycle at this point, AI super cycle, Ethereum super cycle, Bitcoin super cycle, all these super cycles happening, right? Really, in my opinion, it is the government super cycle, right? It's government policy that's driving a lot of this stuff, making it easier to do things. Making it less regulated or even more favorable regulation, as we're seeing with something like the Clarity Act or the Genius. But anyways, outside of that, we still have the Trump administration, aiming for 1.5 trillion in defense spending, right? So again, when you think about who are the beneficiaries of this, not too long ago, Golden Dome was all the rage, talking about the Golden Dome, right? Building this massive missile defense system, which is not just a missile defense system. You still need all the satellites in space. Palantir is probably going to be one of the biggest beneficiaries of all of this, right? Since AI is obviously going to be a part of that. But you have, something like Saddle or Satellogic. I don't know anything about this company, but, if they had a defense contract or several defense contracts, they could be a part of that trade. You have Rocket Lab that is, in the running. You have Lockheed Martin, you have SpaceX. All of these names are part of that Golden Dome initiative, or at least trying to vie for that Golden Dome initiative. But you also have Project Suncatcher from Google. We covered that in a previous stream, right? LEOs, low entry orbit satellites, providing internet. Starlink, right, is another one. All these satellites going into space, to democratize, internet. So, what does that mean? What does that mean for, companies that are involved in all that? Not just the big players like Amazon or SpaceX, but all the suppliers, the supply chain, developing the chips, making the chips, or the memory, or the laser beams that they're going to be using to transmit data to and from. I mean, all that stuff comes into play. Let's see real quick what Saddle is. Let's see. Okay. So again, this is very extremely light due diligence, surface level stuff, not an endorsement by me to buy any of this stuff or to buy the stock, but we can at least cover it on this channel. Okay, so Satellogic is a vertically integrated geospatial company focused on building a scalable, fully automated Earth observation platform. The stock's narrative revolves around its ambitious goals of remapping the entire planet at a high frequency and resolution while navigating heavy cash burn and persistent challenges. That's probably why this is a penny stock, or not a penny stock, but a small cap, I would assume. Let's see, Saddle stock. Let's see what this stock is at the moment. So it's under $10. Okay, it had a bit of a bid over the last couple of days, up 24%. Over the last month, up 44%. God. Oh, where does he be finding these? Where does Victor be finding these, man? 631% over the past 6 months, ladies and gentlemen. 392% year to date. Oh my God. Okay, there has to be a deal or something that this company won. All right, new contract wins. The company's growth narrative centers on the major sovereign defense and monitoring deals, such as contracts with the Brazilian Air Force and Portugal's Atlantic Constellation. All right, so that's what's sending this up. So the bear case is unprofitable ops, dilution, funding reliance, which is a big deal. We're seeing with like Iren. If you guys know that name, Iren is a data center play, if I'm not mistaken. You know, it was a mining company for crypto, and then it turned into data center. But they've been diluting the living hell out of their shareholders. Meanwhile, they have no real rev, no real profit, apparently. All right. I'm not saying that for fact. I haven't done any due diligence on the company, but that seems to be the ongoing narrative for Iren versus someone like Nebius, which is a real company making real money and having real deals. NVIDIA also partnered, or didn't partner, but they have a, I guess you could call it a partnership with Nebius. So anyways, let's see, long sales cycles. Investors should worry about the company's ability to convert its vast pipeline of potential opportunities, often exceeding $1 billion, into tangible recurring revenue, given the notoriously slow nature of government defense contracts. All right, so this is a play really on the defense contract or the defense spending narrative that's out there. So that makes sense. That makes sense why this stock's been going crazy. Especially since satellites is the next big deal. You're going to have countries that are worried about, you know, their space outside of just their normal airspace. So I could see why there's a case for Satellogic, or at least, you know, this company. Interesting stuff. Let's see. I don't think NVIDIA is going to pump tomorrow. The big results are priced in, but hopefully they say Micron HBM to remind people are getting shaken out that we aren't done. I'm in agreement with you. I don't think NVIDIA is going to really pump at all either, but I want to hear what Jensen has to say about, one, the China, what came from the China visit, and two, yeah, you're right. Mentioning Micron or the HBM or, you know, DRAM or any of that stuff, I think that will give us a good kind of indicator on where the entire market really is. And DRAM has been getting, you know, shaken out recently, as you guys have saw earlier in the stream. So maybe we get a huge pump on DRAM, right? Maybe right now is a good opportunity to buy DRAM while it's down. So we'll see. Skeptic laughing. Yeah, skeptic laughing. And then we have all hail Victor the Penny Lord. Bend the knee. His gains are unmatched. But, you know, this is a small cap, you know, not really too much of a, I wouldn't call this a penny stock. I mean, we've seen the penny stocks freaking run like crazy. I remember he posted this one was it QMM? We were just talking about this, me and Victor was, and he mentioned it again, but QMM stock right now it's halted. It's actually halted on the NASDAQ, right? For manipulation, probably some insider stuff. But if we look at the chart, hopefully we can pull it up. No, we can't pull it up, which is a bummer. Let me see. Hold on. QMM. Yeah, this is a crazy stock. You can't buy or sell it right now. It's completely halted. They even put a nice little warning in here. Stock exchanges have temporarily halted QMMM due to increased volatility. This is a market-wide trading halt, so you cannot buy this stock anywhere. It doesn't matter what brokerage you're on. But what is funny about this one, if we look at the 1 year chart, this thing was like, yeah, $4, right? It had a nice little run up. This was really a penny stock. And then Victor told us about this, and it had a nice run up. And then, I got out early, like always, but I got out early. And then this thing had a pump up to 16,000%. It shot up 16,000%. Absolutely insane, right? And then it came crashing down, of course, like most do. Still up 5,800%, right? And then they halted it, right? Yeah, they halted it back in September because they were the SEC was suspicious, NASDAQ was suspicious, so they put a halt on this. But I mean, imagine if you got in right here and you sold right at the top. I mean, that would have been generational money right there. If you put $10,000 in there, I mean, you'd be retired probably many times over at this point. Let's see. Sergio says NVIDIA earnings call will pump semis this week because Jensen will talk about what's coming and you need semis to build it. Yep. Going back to the data center stuff. I mean, where the heck is it? Right here. I mean, this is my guarantee right here. This is my guarantee that NVIDIA will be in demand, AMD will be in demand, DRAM will be in demand. Now, there's articles out there here and there saying, oh, data centers are getting canceled left and right. They're getting paused left and right. AI, artificial intelligence, is a national security issue. The United States is in a Cold War, essentially an AI race with China. And even though some states are balking and saying, oh, we're not going to allow data centers in our neighborhoods, we're not going to let data centers being built. Really, it's just a political bargaining chip. I think it's a bunch of BS, to be honest. Is there a real issue with this? Yes, because data centers increase the power, right? Which means they need a lot of power is what I mean. And when they suck up all the power, there's going to, pass on the costs of rising power costs to Americans, right? To everyday hardworking Americans that now need to pay more for power because data centers are sucking them all up. But that's what makes it also interesting is that there's other companies like XE Energy or X Energy that are coming out with small modular reactors. Oklo, another one, small modular reactors, right? For these data centers, right? So nuclear is now a part of the theme as well. I'm, bullish on the whole nuclear narrative that data centers will eventually have to use nuclear, right? They will have to use some type of nuclear to help, kind of keep the cost low. But also there was, from the Trump administration talking about data centers can be built, but they will have to be responsible for incurring the additional charges on power, right? So that cost won't be passed on to, everyday working Americans. So affordability, all that stuff comes into question. So data centers making my electric bill high. Yep. That's the worry for data centers being built in everyone's backyards. And we saw a video where living next to a data center is extremely loud. It is not exactly quiet. So you also have to deal with that as well. Let's see what else. Okay, so we got a little bit of news. I probably should, I'll cover it right now. We have some news, and I'll probably deep dive this tomorrow. But GPU-X coming out of Round Hill. All right, so GPU-X coming out of Round Hill. This is just hitting the streets. This is, they had such amazing success with DRAM. And as a matter of fact, I wonder what DRAM AUM is at now. Because a lot of people are still buying DRAM, even though we're pretty much at the top. People are just continuing to buy DRAM. Let's see if this website will load. Bingo bongo. Okay, let's see what the AUM is. Okay, so they lost a little bit of AUM. They were at like 9.67 billion yesterday, or the last time I checked. So they lost a little bit of AUM here. Probably people taking profits. Not surprising there. People, they're getting. I'm not saying they're getting scared out. Again, I agree with the narrative that people are selling DRAM at the top, not because they're bearish on DRAM itself or the trade, but they just they can get back in at cheaper prices, right? I think that's really what the play is here. So where else? Yeah, so going back to this, again, they hit it out of the park with DRAM. So GPU-X is going to be an ETF that's focused on computational power as an asset class by investing in standardized future contracts. Oh, this is the freaking, yes, the CME group, I think, is coming out with a managed futures for compute, or a futures market for compute. So now Roundhill wants to get ahead of the curve and come out with an ETF that already has all that wrapped up. So that is interesting. I swear, Roundhill be ahead of the game, man. People don't like them for one reason or another, but I think that's kind of silly because they have a bunch of ETFs that are very, very good. And one of them I'm really interested in hearing. If you want to be a super degenerate, you can wait for the Roundhill event contract ETF that's coming out, if this page will ever load. Essentially, this is going to be prediction markets in the ETF. All right. Prediction markets in the ETF wrapper, which would be absolutely insane. Yeah, I don't know if this is going to load. Okay, maybe not. Sorry for the hype. So yeah, Roundhill is just coming out with a lot of cool stuff. Let's see. So Sergio says we need uranium from Iran to build the SMR nuclear reactors. From Iran? Because again, when you're thinking about nuclear and uranium, the fuel that is really going to drive a lot of this SMR stuff is going to be HALEU. The HALEU fuel, we covered HALEU fuel in another stream. But the biggest maker of fuel, there's only two of them. And that is a company in Russia, which is sanctioned, so the United States can't buy from them. But also a company in the United States called LEU is the ticker. It's Centrus Energy, and they produce HALEU for SMRs. And also, there is a stock we covered not too long ago, which I'm moderately bullish on, and I'm just waiting for this company to kind of do its stock split. That's not the right term. It's it's not a stock split. What they're doing is they're doing a spinoff. So there's ASP Isotopes, or ticker ASPI. Again, I'm not endorsing anyone go out and buy this thing. All right, this is a small cap company, potential for high loss. But the story with ASP Isotopes is that they want to help, or they want to produce HALEU as well, using a different proprietary technology using lasers. So what they're going to do is spin off that segment of their business and call it QLE, which is Quantum Leap Energy. So they're going to spin off QLE, and Quantum Leap Energy will be also focused on producing HALEU. Okay, and if you're a believer in uranium, the uranium story, small modular reactors, and HALEU, then you would probably surmise that QLE and LEU will be important plays. LEU is like the large cap; it's the market leader. Right, so it's the NVIDIA of HALEU. Okay, ASPI, they create some really fascinating stuff. One is isotope 28 or silicon 28, and silicon 28 is used for quantum chips. So kind of the bull case for ASPI is that they're going to get a major win eventually when quantum chips become all the rage. But they'll win some type of contract with a semiconductor company to produce the next generation of quantum chips. But ASPI is going to spin off QLE. So anyone who's holding ASPI should, or potentially in the future, could also get QLE shares. So that's why I'm holding ASPI. So it's kind of like a proxy. So Shannon Thomas says, Quantum Leap screams degen. Come to me. Absolutely. You're absolutely 100% right. This is all very, very surface level due diligence that I'm sharing with you guys. But I believe in the bull case for ASP and QLE. I believe in the case, the narrative, the story for uranium, how important it will be. We've covered it on this channel that uranium is it's going to be probably the next big push by a lot of countries after this Hormuz stuff. Okay. If anything, it taught a lot of countries not to rely on oil from the Strait of Hormuz, right? When you have a geopolitical conflict occurring and supply chains get cut, I think Europe has also figured this out. Despite getting a huge amount of their oil from the Strait of Hormuz, they're now discovering that, oh crap, the one strait that we get all of our oil from is in trouble. And, now we're in deep, stuff. So I think uranium is going to be the next story, along with copper, for the power upgrades that's happening in the United States and in other countries, right? Countries are going to want data centers. Europe is definitely going to want data centers. They're building out their sovereign AI strategy, and they're going to need data centers. They're going to need to upgrade their power, right? You're going to need a lot of copper for that. So, oh yeah, I'm bullish Cuban cigars all day long, baby, all day long. I'm bullish Cuban cigars. Let's see what we got here. You didn't know about this? ASP isotopes? I think I mentioned it and I dropped a bunch of screenshots in the Discord. You're talking about the event contracts. Yeah, from Round Hill. Yes. They're coming out with like a prediction market ETF, which is kind of crazy. I mean, I would have never thought you could. I mean, if you think ASPI is a degen holding, I mean, just wait until this prediction market or event contract ETF comes out. I think that will be super, super degen. Enough to take out a HELOC and go all in on. Let's see. What else we got here? Okay. Well, ladies and gentlemen, I think that will do it for the stream. I want to give a special shout out to the 93, 94 viewers on X and to the 26, 25 viewers on YouTube. I do appreciate you guys. All right, but I think I'm going to call it here. We've been streaming for about an hour and 20 minutes. We got through the news stream and we covered, just a bunch of random nonsense. Hope you guys were entertained. Hope you guys got a little bit of value from the stream. If you don't mind, if you like the content, don't forget to hit like and sub or follow if you do like this type of stuff. And as always, I will see you in the next stream. You guys have a great rest of your evening, a great rest of your day, wherever you are in the world. And you guys take care. Thanks for joining.